Yo, what's going on YouTube? So we're back again with another video. If you haven't already got me on socials, don't forget to click the link below with all my social handles just to stay connected. So yeah, let's get straight into it. So today we've got another weekly analysis. This will be number 17. If you haven't already watched the previous video, it will be in the link below as well. So today we've got so we've got about 8 to 9 pairs that we're looking at for the upcoming week. Market is open 10 minutes ago as of this video. So I'm just going to roll through exactly what we're looking at. As you can see on the right hand side, we've got about 6 pairs that are highlighted in a light blue. This marks our daily swing pairs, so essentially just looking for setups on a daily time frame and entering on the 4-hour time frame. And then we've got the pink pairs, which are setups on a weekly time frame, entering on a daily time frame. It's as simple as that. If you already know the strategy, then you know exactly what we're looking for, as well as our entry requirements. And if you don't know the strategy, there will be a link in the description below that outlines the strategy as a whole. It's straightforward, as simple as that. So first pair we're looking at, we've got EURCAD. So essentially what we're looking for is an impulse and a correction. Now we did have our impulse coming down from this area here, and I'll mark it out for you. So this was our initial impulse. However, as you can see, we've now got an impulse in the opposite direction, right, followed by the correction. Now this would have been a sell order. However, as you can see from this area over here, if I mark this out in blue, we had our support area, which did turn into a resistance area until price broke above it. Now that price is broken above our resistance zone, it now invalidates the setup, and what we're looking for is buys. Now that we still have our impulse and correction in the opposite direction, and as you can see, price broke above the resistance zone, which is now acting as a support area, which should hold as a support area. If it breaks below, then we're no longer looking for buys. We would look for this low down here. We would look for this low down here to be broken to continue to go for sales, or essentially even this low down here before we continue looking for sales. But for the time being, we're looking for buys. So the daily is bullish, number one. Weekly is also bullish. As you can see, we have a support area over here, and I'll mark this in red so you can tell the difference. So we've got a support area over here. We drag this across. As you can see, we've got a support area over here as well. And if you want to, you could even say we've got a inverted head and shoulders, right? So you've got the first leg, you've got the head or inverted head, and you've got the second shoulder or the second leg. So we should essentially get involved with the movement that pushes price up to give us the third leg before price decides to come back down to retest the neckline before going higher. That's what this price action should do in the forthcoming days, or even weeks, potentially months as well. But for the time being, obviously we're just looking at our higher time frame to give us our overall direction for the trade as well. Monthly time frame, as you can see, we are in a bit of a consolidating market. However, because we're entering on the 4-hour time frame and we're looking for the setups on a daily, we don't need to worry too much about the monthly time frame, because again, our target on the daily time frame is pretty much further away from where the monthly resistance is, including the weekly resistance, which would also be down here, for example, right? So weekly we're consolidating, monthly we're consolidating, weekly we are bullish, and daily we are also bullish as well. So that gives us a confluence to go for longs unless price decides to break below the daily time frame. If it does, then we will no longer be looking for setups, because the correction would have been too strong in comparison to the daily impulse. So we will no longer be looking for a setup like that. But for the time being, as you can see, we've already got our two confluences. So the daily, we've got our impulse and correction, which is also bullish, and then we've got the weekly time frame, which is also bullish. So that's two confluences. We've got our, let me get rid of these boxes so you can see it. so from the bottom of the impulse to the top of the impulse, and we got the correction. As you can see, price has touched and also surpassed the 38.2. So that's the extra confluence. The correction is still smaller than the impulse, so you can add that as the next confluence as well. So that's about 4 confluences in this point. Now that we've got that, simply we adjust our fib because we've got the correction. Now we've got 2 minimum candles, that's the 5th confluence. And now simply all we need to do is wait for the break and retest of the 61.8 on a 4-hour time frame. The 4-hour time frame is our entry time frame. So we would now mark, well, what I will do is I'll set an alert. I would get a horizontal ray tool, which is here. I would get that tool. Obviously you can change the lines if you really wanted to. In this case, so that I can see it, I fill it as dotted lines. But what you want to do is set it for crossing up once per bar close, and we would wait for the 4-hour time frame to close above the 61.8. So price can create higher highs, higher lows up until it breaks the 61.8. Once it breaks and closes above the 61.8 on a 4-hour time frame, we would set our buy limit order at the 61.8, or maybe a few pips above or a few pips below, depending on price action as price breaks above the 61.8. And we would target the negative 27. Negative 27 is all the way up here, right? And then our stop loss would also go below the 88 level, which would now be around here, right? Aiming for that 1 to 3. So that's what we're doing here. It's as simple as that. Let me just get rid of this. There we go. Yeah, so it's as simple as that. That's what we're waiting for EURCAD. So again, wouldn't be taking this pair until we get our entry requirements. As of now, the setup is still valid until we get a message that says otherwise. So EURCAD were bullish. That's the first pair. Second pair, we've got EURCHF. Now EURCHF, as you can see, we've got this massive wick, which now lines up with this resistance turned support area over here, right? So just off of that, we're bullish alone. With this pair, as you can see, because we have that massive wick, what I won't do is I won't draw my fib like this, because that's a serious wick. What I'll do is I'll do it from the next candle above. So we've still got a bit of space before price comes down to the 38.2. If it does come back down to the 38.2, we have a support area over here which lines up with the 38.2. So that could be our confluence over here. Now with this pair specifically, as you can see, even on this one, we had a weekly ICI setup, right? As you can see over here, impulse correction, 38.2 got hit. We did break the previous resistance area, which lined up with the 38.2, and as you can see over here, right, price broke above the 61.8 on a daily time frame and took off without us, right? So we're still bullish in this sense. So simply what we're looking for, because we're still bullish, what I want to see is I want to see price respect this area over here, right, which could line up with the 38.2, as I said, on the daily time frame. And as long as it lines up with that area there, that would be a good shout to continue to go for longs. So essentially, I'm still waiting for price to come back down to the 38.2. And if it does come back to the 38.2, then what I would be looking for is to adjust my fib a bit further to wherever the lowest low is during that retracement, and I will simply wait for that break of the 61.8 to enter longs to go and target maybe these highs, depending on where I need to put my fib. It could come down to as low as this area here, for example. As long as the retracement is shorter than the impulse, we're still going for longs in this sense, right? Even the monthly time frame, as you can see, we are above the monthly resistance area, support turned to resistance area. And we also have a W formation as well. If you know what a W formation is, basically W formation is like this basically. So it could come and retest either the first leg here or even the neckline, one of these two necklines here before going higher. Essentially it's like a head and shoulders or an inverted head and shoulders, depending on the direction you're going in. But as you can see, we broke above the monthly resistance to support area, and now we are turning into support. Price is pushing up. with that massive wick on the monthly as well as the weekly, and we're still going higher. Not too concerned about this resistance area here that we have on the weekly, right? Because again, I wouldn't necessarily enter this trade until I get my entry time frame. Until I get my entry requirements. If I don't get my entry requirements, I'm not looking at the trade, which is why, as you can see on the right hand side, we have several pairs to trade, and we mark them out and we play along with what the market presents to us. On the daily time frame, as you can see, we still have a W formation, although this is a massive wick over here. We still have our W formation anyways, so price could come back down to retest this one because it didn't cross above this one, so it could come back down to retest this area before going higher. But in the meantime, this EURCHF, this is still on my watch list just to see what happens. More than likely wouldn't be one of the first trades that I do take in comparison with the rest of them that I do have, but it is definitely on my watch list. Now, next pair, we've got GBPCAD. Now, GBPCAD, what we're looking to do with this one is we're looking to short it. Now, as you can see, I've got my red zones and I've got my blue zones. Red zones mark the weekly resistance or monthly resistance, and the daily only marks so the blue zones only mark the dailies. So we did have this support area which price did break below, and we also had this other daily support area which price did break below as well. Usually I like to mark the first two areas. I'm not concerned about these areas over here because those are a price in previous time. So we've got the first two. Now the first one definitely broke past, second one definitely broke past. Now during the retracement is still shorter than the impulse, which is a good thing. Now we have broken above this area over here. I'm not concerned about this one because sometimes what price would like to do is price will instead of stopping at, so if it's broken past the first one and the second one, instead of stopping at the latest one, which is the second one, price usually comes back down, comes back to the first zone that it did break, which will be this zone here that I've got marked up. And if it comes back to that zone, then it's basically respecting that zone. And what we're still looking for, anyone that basically had their order limits, anywhere in this area, let's say if they had an order limit here, for example, and then put their stop loss here, above that area, which is a respected area, and then maybe targeting these lows. Anyone that did have their entries like that, for example, they would have got stopped out. So if you want to say, liquidity hunt or stop loss hunt, whatever you want to call it, you can call it that. But I'm not concerned about that because the first two zones, although it's broken, the second one hasn't broken the first one, and higher time frame says otherwise. Higher time frame says we're still bearish on this setup anyways. And again, I'm not looking to enter unless I get my entry requirements. I need to see it break and close below the 61.8 before I decide to even sell. If I don't see that, I'm not entering. And if I don't see that, then that means price has clearly continued upwards, right, in this direction, meaning it respected the second latest zone that it did break above, which is likely as well. But again, unless I see something otherwise that tells me that price is going bullish, then I'm not taking that trade, or I will take that trade if it tells me it's going bullish, or vice versa. But in this case, I'm selling. So we have our impulse going downwards, we have our correction. Price has clearly got to our 38.2 area, even to the 61.8 area at this point. So the retracement is good. We adjust our fib, right? And then we can go to the weekly time frame and we can see where price is at on the weekly time frame. Weekly time frame, we are in this area over here. So we've got a weekly support area over here, and we've also got a weekly resistance area over here, right? So it is in a bit of a tricky zone, as you can see, because technically we're in between these two areas, these two red zones. However, if you look on a monthly time frame, what does the monthly say? The monthly is the highest out of all of them. Monthly time frame, as you can see, we've got this area over here that I just drew. Now that is a big area, right? Because the the monthly support zone will be here, or even this area over here, for example, which is essentially where our TP is. If I scroll in, as you can see, let me get rid of this so you can see clearly. So where we've adjusted our fib, and I'll draw this properly so you can see, get rid of this and get rid of this. So as you can see, what we're essentially looking for is a break of the 61.8 to target a negative 27, right? Negative 27 is literally inside that monthly support area, right? If I go back to the monthly area, as you can see, that is where our TP is here. So I would still look for sales at this point, because we haven't actually tapped into this monthly resistance. What was resistance at one point turned to support area, right? Haven't tapped into it in terms of this movement. Of course, we've tapped into it here, but with recent movement, recent price action, we haven't tapped into it yet. So I would still go bearish in this case until price tells me otherwise, right? So that's what I'm looking for GBPCAD. Simply just waiting for that break and retest of the 61.8. If it gives us that, then again, as I said, we're entering. If it doesn't give us that, we're not entering at all. So GBPCAD, we're bearish. Simple as that. Next setup, we've got US30. Now I did enter this one on Friday. We was looking for sell setups. However, obviously, as you can see, because of the strategy, we simply wait for one color going in one direction and the same color going in the opposite direction as well. So we did get invalidated in terms of the setups, which is a good thing in this case, because if you rushed it, you would have got stopped out for sales. Now, as you can see, we've got impulse going to the upside, and then we've got the correction. Now the correction is clearly respecting this area, which was support, did turn into resistance, and now it's turned back into support. So this is a flip zone, if you guys know what a flip zone is. If you don't, I'll do another video on flip zones, which is very useful to catch reversals. So in this case, as you can see, impulse, correction, price hit the 38.2, came to the 61.8, rejected, tapped into this area as well. So we've got our confluences there. Now we adjust our fib, higher time frame. As you can see, our higher time frame, we have a resistance area over here. Sorry, not resistance, support. We've got a support area over here, which also was respected from this candle here, right? So higher weekly time frame, we're bullish as well. And then we've also got the monthly time frame. Now if I draw a fib from the monthly time frame, this should, well, as you can see, it hasn't tapped into the 38.2 just yet. However, remember, these fib levels, they're not 100%. They are an area in the market. So price doesn't always have to come back down and tap into the actual fib level. It can come near it and completely reverse from that area. So in this case, we are still bullish on a weekly time frame, right? And monthly, well, monthly, as you can see, we're above the previous monthly resistance zones. Obviously, we've broken these areas over here, and we've also broken this area over here. So we're still bullish in this sense anyways, right? So simply, now that we've got our we've got our now that we've got our confluences, right? As you can see, again, I did take this on a Friday, so we got our entry signal on the Thursday, and I got tapped into the trade on the Friday around New York session. Now this was the New York session tap in, probably tapped me in around literally 30 minutes after New York session. So price, as per the strategy, if price closes above the 38.2, then we move our stop loss to break even, and we don't bother chasing the trade, right? So in this case, I'm still watching this one just to see what happened. I did close it, I'm just watching it in this sense. But for this pair, if you guys did want to get involved in it, again, I wouldn't suggest it, but if you did want to get involved in it, I would suggest putting your entries either at the 61.8 again, or maybe even around this structure area over here. So maybe around this level here, basically, and that should be the 50% area. Yeah, so if you do want to get involved again, feel free, get in around the 50% area, target the negative 27, and adjust your stop loss whereabouts. So you can either put it for a 1 to 2 and put your stop loss literally at the 88, or feel free to go for that 1 to 3 and put it still below these lows over here, right? And get involved in the trade. But US30, I'm just watching it, I'm not taking the trade. It's as simple as that for that one. So I can actually take this one off my list. Well, that's that. Now the next pair, we've got USDCAD. Now this one is in a bit of a tricky situation. Now we did have USDCAD going for buys, but as you can see, price is broken below this area, right? So we did have highs that price was broke, that did break in previous time, and then we also had these highs that price did break as well. And so we've got the impulse and we've got the correction. Now the correction, as you can see, is way below the first, well, the latest zone, in other words, right? Because this would have been the first one, similar to how we've got GBPCAD. When I said price broke past the first one, the second one disrespect to the second one but respect to the first one, right? So we've got a similar scenario happening over here. The only difference is with GBPCAD, as you can see, it's all one color, right? In one direction, or one color in the opposite direction, as well as with the impulse and the correction. Now with USDCAD, as you can see, we do have one color going in one direction for the impulse, and we've got one color going in the opposite direction for the correction as well, right? However, these candles that are being formed here, this is what I'm not liking currently, basically. So simply what I'm going to be doing with this one is be very cautious. Maybe I won't go full risk, maybe I'll go half risk. It just depends on what price does. Now if price creates another bearish candle, then I would immediately not bother watching this trade, and I'll just wait for another clear setup. If it creates another bullish candle going in the upwards direction, of course, then that's gonna help validate our setups. And as long as price breaks the 61.8 in this case, so if price does this, for example, and finally breaks 61.8, then yeah, for sure, I'm gonna get in the trade, half risk, and or for full risk, depending on how I'm feeling, and take it to negative 27, right? Because this red zone here is our weekly resistance area, and the negative 27, our TP is above it. More than likely, depending on what day price gets to this area, if it's on a Friday, for example, more than likely I would probably get out around the very bottom of that area, just because I don't hold over the weekends. So fingers crossed, USDCAD gives us our entry signal this week. If it doesn't give us an entry signal this week, and as I said, gives us another bearish candle, then I'm not getting involved in that trade. But as you can see right now, it is respecting this support turn to resistance area, and we are still looking bullish. Although price has closed below this support area, or sorry, what was once a resistance area, which turned into a support area and is now acting as a resistance area. Again, it's in a similar scenario as GBPCAD. So if GBPCAD gives us a bullish candle, then if GBPCAD gives us a bullish candle and even doesn't break above the fib level, or even if it doesn't even tap into this box area, as long as this bullish candle, if the candle comes out blue, I'm no longer taking the setup. Same thing with USDCAD. If it gives us a bearish candle, I'm not taking the setup. I need to see bullish action that shows us, okay, these areas are being respected, even though price closed below this area over here. That's what I need to see, right? Because again, higher time frame, as you can see, weekly time frame, look, right? This is our weekly resistance area. We're still bullish overall. Look, we even have a bullish ICI setup at this point, right? So with this one, what I'm simply waiting for is a break of the 61.8, and I can take this to either be a weekly ICI or even a daily ICI, right? Doesn't really make a difference how you see it at this point. But as you can see, because initially this wasn't a bullish ICI setup on a daily time frame, but because these candles that are being formed now have actually invalidated that setup, right, quote unquote, you wouldn't take that on a daily time frame. However, right, so you wouldn't take that on a daily setup. However, as you can see, on a weekly time frame, we still have a weekly ICI setup. So in other words, having both of them coincide together, right, gives us that confirmation to say that USDCAD is still going for long. So our direction is fine. It's just about our entries. So you've got two options at this point. You can either wait for a daily break above the 61.8 and then enter and put a buy limit on a daily time frame at the 61.8, totally up to you. Or you can wait for a 4-hour break, because now essentially what you'll be looking at is a daily setup rather than a weekly setup. If you're looking at the weekly setup, doesn't make a difference. Why? Because at this point, the daily and the weekly, both of them are the same, just for this specific pair and this specific setup that we're looking at right now, the target for the weekly and the target for the daily, they are literally the same level. If you know the strategy and you know the setups, what you're looking for, you would understand. But as I said, look, weekly, we've got the impulse and we've got the correction, right? Boom. And then what we're waiting for is that break of the 61. The break of the 61 is literally the same thing, right? But remember when I said, if you're looking for the daily setups, these candles would have invalidated that setup. It's as simple as that. But the higher time frame is king. So the higher time frame tells us exactly where price wants to go. In this case, we're still bullish. So we're going to take that bullish setup as long as we get that break of the 61.8. It's up to you to wait for the daily to break the 61.8, or you can wait for the 4 hour to break the 61.8. Either way, this is a good trade, right? Next pair, we've got gold for the next pair. So gold, we're looking for shorts. Price does look like it is in a, well, price for gold is all-time highs right now, and as you can see, it looks like it does want to come back down. So we've got our, if you get our fib from here to here, as you can see, price has touched our 38.2, right? But if we're looking for ICIs, we need a second retracement candle. So in this case, as you can see, price does want to retrace. So we're still looking for shorts in this case. We have our support area over here. Price has broken below. Now we've got the retracement. We've got 2 candle retracement minimum. If I draw my fib as normal, as you can see, price has tapped into the 38.2 level as well. Adjust our fib. Weekly time frame, as you can see, we've got a weekly resistance area over here, right, which we are below. And then we've also got the monthly time frame, of course, because we're at all-time highs. As you can see, we've got just this candle. Let me get rid of everything. We've got just this one candle here, which is clearly rejecting from this area here. So we're still looking for sales in this case, right? So high monthly bearish, weekly bearish, daily time frame we are bearish unless price says otherwise. In this case, what we're looking for, again, this is a daily setup. So in this case, what we're looking for, entries on a 4 hour time frame, right? So simply, I've got my alert set already. Actually, I didn't. Now I've got my alert set. Simply what I'm waiting for price to do is to break this 61.8 level. If it breaks that 61.8 level, entries as a sell limit at the 61.8, either a few pips above or below, depending on where structure is. In this case, because this candle is bullish, more than likely it will be directly on the 61.8, and then stop loss will be basically just before the lows, which is at 88 level here, and we are targeting that negative 27, right? That negative 27 now lines up with this area of structure that we have over here as well, right? So each candle that you see that changes color is a structure depending on what time frame you're looking at. So if you go on the smaller time frame, because that's just one daily candle here, if you go on the smaller time frame, as you can see, we've got all of these candles here giving us highs and lows. That's structure, right? So that's what we're looking for gold for this week, depending on how price wants to play out. So fingers crossed we get that set up as well. And then we've also got the oil trades, which aren't over. I actually said this in the weekly analysis 16, which is last week's weekly analysis. I said we're going bearish. Now, if you remember when I said that, simply waiting for the daily time frame to cross above the 61.8, which we did get over here on Tuesday. We've got our retest. We was in drawdown for a bit, and now guess what? Price decided to take off finally. We have this massive wick over here, which when price creates something like that, more than likely price will come back and fill it, because that is inefficiency, right? So this one here, because it still hasn't broken above the 38.2 at this point, guess what you could do? You could either enter at the 61.8, or you can enter around the 50% fib level, which should be around this level over here, and you're still targeting that negative 27, right? So totally up to you guys how you want to do this one, but this setup is still valid for UK oil, and I did go over this in the previous video. So if you want to check weekly analysis 16, there should be a link below as well, so you guys can check that out as well. So for this one, UK oil and US oil, essentially they're both the same thing. As you can see, look, price did come out of the box, right? But it's still respecting that whole area, so we're still bullish in this sense. So we are still going for longs. Now this would have been our break. this would have been our retest. We would have been in drawdown for a bit. Price decided to shoot off on Thursday, and Friday it was stagnant. So this one you can definitely still get in for buys. Just put your buy limit at the 61.8 for this one. And then what we're targeting, the negative 27. The negative 27 now lines up with these support turn to resistance areas, literally there. So that's our target. So that's how you know our targets should either be below or around some sort of structure level. And if it's not, or if it's way above it, then you know for a fact that that price hitting your TP at that point is less likely, but you should know when to get out or where to get out. But our target will always be the negative 27. So those are the pairs I'm looking at for this week, for this upcoming week. Pretty straightforward and simple. Of course, we've got all these other pairs that haven't set up just yet, which may give us a setup, and these ones that we've marked up just now may fail at some point potentially. But we will never know in that sense. So what we're gonna do is we're just gonna wait and see, and we're gonna take any setup that gives us our entry signal. If it doesn't give us our entry signal, that being break and close above the 61.8, if it doesn't give us our entry signal, we're not taking that setup. And if it does, we're taking that setup. Half risk, full risk, or full port, whatever you guys want to do. Just make sure there is you guys have risk management in place, and you don't over leverage and you don't over trade. It's as simple as that. So that's our video for today. Don't forget to like, subscribe, comment, share, and also, as I said, check out my social media pages. If you haven't already followed me on any of them, links will be below in the description box. And yeah, just tap in. Happy trading, guys. Catch you guys next week. Peace.